Arvind calls us from Bengaluru. He has a query. He has investments in Gail. Well, I think it's up for you on the screen. I'm not sure whether we have connected to the caller. Okay, all right. Hi, good afternoon. Arvind, tell us, what's your query?
Good afternoon. I have invested in Gail shares at 83.85 rupees, around 1,100 shares.
Okay.
And now I currently have a profit of 39,270 rupees around. I have, within a month, I have got 42% returns, but I don't know, should I hold on to that gains, or should I sell it, or should I look forward to for further more gains?
You know, Arvind, you're sounding so somber going into the weekend. You should be happy. You should be on top of the world. You're making such big returns in such a short duration. And as I read, you're a student as well. So good on you, mate. Let's see whether or not you should take the money off the table and go and have a great weekend. I mean, though there is a social distancing and you need to be homebound. But let's find out from our experts. Mayuresh, what do you think? What's the advice?
Afternoon, Nigel. Afternoon, Sumera. No, so absolutely, he should be elated with the kind of money that he's making in a few days. But it's really, again, a perspective, because what Gail has probably reported from a quarter's perspective, gas trading continued to remain weak. And that was obvious because what you probably saw in terms of trading volumes, though they have probably recovered, I think the higher LNG prices and with winter season coming around, with spot LNG prices moving higher, there might be some element in terms of the EBIT performance of the gas trading still being in the red over the next year or so. When it comes to gas transmission, their other line of business, the transmission volumes positively surprised in the quarter gone by. And the expectation is that with more pipelines coming through and the commissioning that has probably happened, the utilization levels will pull up the gas transmission volumes and the realization and the EBIT as well. So I think that should be relatively better on that front. As far as the petchem business is concerned, when you're probably talking about volumes, volume should remain steady. But again, I think it's largely dependent in terms of the end prices. Again, LNG prices moving higher means that output prices might be a little bit on the lower side, while LPG, LLH actually depends upon the higher gas prices, which are expected to come through. So cash flows are strong, dividend yield above 5% and the business segments expected to improve going forward as well. So our opinion is, if he is a medium-term investor as per our own methodology and ratings, he can hold on to the stock. If he's probably looking at a short-term perspective, he can probably trail his losses. So I think he can put his price above his cost price, so that if the market does have a knee-jerk reaction, he's better off at least with the kind of money he's making.
Okay, all right. Well, let's get to our next query. We have Karthik who writes to us from Bengaluru with a query. He has investments in SBI Cards. Mayuresh, what's your view on SBI Cards? The stock has been very, very volatile, but he's lucky. He's gotten at around 560 and he's making good money.
Oh yes, I saw that, Nigel, and the price is probably good to be true, specifically in terms of the business model that SBI Card has. Now, I think somebody's lost, somebody's gained. So what happened with HDFC, the unfortunate incidences, has the knee-jerk reaction on the positive side for SBI Card, and the numbers again are quite reasonable as well. So if you look at the cards in force, 18.7 odd %, the spends at 20.5 odd %, they've actually increased their provisioning. So the provisioning overlay is close to 750 odd crores, and the GNP is, even if they've inched up at 4.29%, and if they're expected to remain around these levels at least for a quarter, there should be large expectations that should start coming down over the next few quarters as well. So the spends specifically on the retail side, very, very close to the pre-COVID levels. The customer acquisition, very, very close to the pre-COVID level as well. The balance sheet itself has grown to around 24,000 crores. And again, the market share gains, as I mentioned, I think that will keep on increasing going forward as well, as more and more digital means are probably adopted. So I think it's a nice space. I think ownership in terms of the credit card spends going digital, I think that will abet cash flows and revenues for the company as well. And the recent incidences are creating further momentum for the stock. So yeah, you can very well hold on to the stock. Nigel.
Okay, Mayuresh, you agree? I mean, the stock has had quite a big run up already. You think it's good for more?
It is good for more, Sumera, because I think, as Rahul was mentioning, I think the asset monetization that they've done on the Jio platform and the retail platform as well. I think that is exemplary. So I think the company from a gross debt status has come out to a net cash situation at this point of time. And again, I think with such market investors coming through, I think the entire portfolio monetization and the digitalization thereof is going to hold it in good stead. The second element also is, Sumera, that the chemical business, the O2C business, and the deal thereof with the Middle Eastern guys has still not been called off. So I think if there is any progress on that one, the entire shift, which has already started to happen from oil to chemicals because of the better realization and profitability per barrel on the chemical side of the business and the availability of feedstock thereof, even that business should hold up pretty well. So yeah, I think subscribers probably expected to still move to Jio, ARPU is expected to increase, retail margins expected to inch back as well. I think all these pieces are holding up quite nicely. So you can very well hold on looking at the price. As per our methodology, I think he can add more if the stock crosses 2100. So I think if it crosses its 50 DMA as per our O'Neill ratings and price strength, that is where I think the entire supply pressures will be taken care of. But at this point of time, we can very well hold on to the stock.
All right. Well, I think we have Mr. Basu or Mr. Roy who writes to us from West Bengal. He holds around 5,000 shares of Intellect Design Arena at around 105 rupees. Let's get that played up for you on the screen. He's a long-term investor. Wants to know whether or not to hold or to sell. Mayuresh, what do your advice be? Making good money here.
Yeah, he's making good money, Nigel, and the stock has given reasonable amount of earnings returns. So if you probably look at the bottom line growth, that has far more accentuated than the top line growth at this point of time. So again, I think the kind of business model that Intellect probably runs, the expectation largely is that there will be improvement going forward, and substantial one, both on the EBIT front and therefore reflecting relatively positively on the return ratios, specifically ROEs. But my advice here would be that since the run-up has been pretty stark, the stock might consolidate around the current levels. The bigger IT names, I think that is where, as a bunch, you can probably look at that. So I think the larger IT companies is where our focus is, because I think we love leaders within the larger IT space.